What's up, legends? Welcome back to the channel. It's a good week so far with Bitcoin, just touching on 30K again today, taking out a lot of liquidation levels that I had been watching along the way. So we're going to talk about the current price action, what to potentially expect next. We're going to zoom out, have a look at some bigger time frames down into the smaller time frames as always. And I'm going to talk to you about how open interest could have given you an idea that this was going to happen so that you can know for next time in case you happen to miss the move. But never to worry, there's always another move coming. So if that's kind of information that you like, be sure to smash that like button nice and early, as it does help to get the video around the internet and out to more people. If you are new here, welcome. One thing you may not know is before we get into the video, I like to share with you some of my travels so that you can know where I am in the world and what I'm up to. I'm currently in London. It is a whole day in London, but I only just got here. So I'm going to finish off showing you the last of my trip in Japan from last week, and then we will get into the Bitcoin and Ethereum price action. Okay, so let's take a look at Bitcoin. I'm going to have to redo this whole chart, which I will do for this video so that you guys know the most current information. But I've got this circle here that I want to talk about, as it was an area that I had given a bit of a hint to in the Discord community before the breakout happened. I'm going to tell you exactly why. So as we're looking at this price action on the 15-minute time frame, one thing I noticed was that Bitcoin in this whole period here from the weekend to yesterday was continuously rejecting the 200 EMA, which is the yellow EMA that you can see on the screen there. Now, a couple of things had happened. We had this spike low. Now, this we expected because we actually did see some heat map long orders at that level, and this blue down here was a liquidation level as well. So they spiked right into that liquidation level and then moved out of that level fast. That's what we want to see in a liquidation zone. So just know that liquidation zones aren't automatic reversals. They're areas where we want to see is the buy up, if it's to the downside, is the buy up strong and fast and shoots back out of that range, or does it consolidate around that liquidation zone for a long time? Because if it consolidates, it's usually likely that we'll have continuation in the same direction. But if it shifts out fast away and they don't return there, which you can see they never return to this one, then that's usually where a trend may change. So in this period here, it was quite tricky because price was not giving anything that was really good enough to take a trade on. But once this move had happened, that's where you start to know that traders are trapped because it spiked into a zone fast and then it moved away fast. And so all you watch for next after that is, does it return to that zone? So whilst this period of consolidation was happening here now, this is where you start to look for hints. And the hints can sometimes come in wicks, and sometimes you need something else as well. So there was quite a few wicks to the downside here that were a hint that they were spiking. The wicks that spike in a direction are your hint that the market maker is trying to induce a position in that direction. So if the spikes are to the downside, they're trying to induce traders to open more short positions, which then usually leads to a break in the other direction, right? So that's why wicks are so important. Most of the time in like normal retail trading, you don't really pay too much attention to wicks, but the wicks tell the story. But in addition to these two spikes spikes down here back into this zone, we also had trap traders up here at the last attempt at the 200 EMA. So therefore you start to need a little bit more information. Now, anytime price is going sideways and consolidating, the market maker is accumulating. All right, that's one thing to always remember. If price is going sideways, the market maker is accumulating. So you have to learn how to read via the candles that are happening in that consolidation to get a hint of what might happen next. And this is what kind of sparked my interest, was whilst we were in this zone here and we're starting to move to the end of it, you can see this open interest here. I have a red arrow on it. I'll expand it so you can see it. So at the time, it was this open interest right here that was starting to rise. Now, when open interest rises and price is only going sideways, what that means is that more positions are being opened and the market maker is meeting the other side of those positions. Now, that doesn't mean long or short, it's just positions. All the market maker cares about is that they can get retail to commit to positions. So if open interest is rising, but the price isn't changing, we're just consolidating sideways, basically the market maker is winning. They're getting you to commit to a position, whichever direction that position is, they're getting you to make a commitment. Market maker can't shift price out into a massive range without having retail commitment. So open interest is your hint of that. And when you have price going sideways, but open interest rising, what that means is that because they're getting that commitment from retail, they don't have to do too many shady moves. So a lot of the times in consolidation, towards the end of consolidation, you'll get a stop hunt. And if you've been trading for a while and you've ever said that saying, oh, you know, I always get stopped out and then price goes my way, that's by design, because the market makers know where most people will put their stop loss, below support or above resistance. They know around about where most retail will put their stop loss. And so they go for that area first before they shift out the fast way. So then you're left sitting, well, I picked the direction right, but I got stopped out. But who cares if you picked it right if you got stopped out? Because the damage is already done to you, right? You're out of the trade. And so anyway, the point of me telling you that is when you have price consolidating but open interest rising, because the market maker is getting the commitment from retail that they need before they can make their fast move out of the zone, they don't have to play those games. So they don't have to issue a stop hunt because they've got the commitment. Stop hunts help them collect their contracts by taking you out of yours, right? So like I said, if they're getting the commitment, they're building their contracts, so they don't need to. So this rising interest was the hint here for me. And this here was the update that I put in the community yesterday, letting them know rising open interest, flat price equals stop hunt not necessary, which means we look to who's trapped for our hint, right? So that's what we were looking for. Now that you notice that rising interest and sideways price, you want to start to look for who's trapped. So therefore we mark this area because we know that people who shorted in this candle, because don't forget, before that candle closed green, it was looking like a very big red candle at the bottom of that wick, right? So a lot of people panic into positions before the candle closes, and those people who did that, opening shorts thinking it broke a support or whatever, they were now trapped. But the same thing was up here at the 200 EMA. So my advice to the community was, if they're going to shift to the upside, which I believed they were going to shift to the upside simply because this was a very big trap in comparison to this little candle. It's, you know, that's kind of nothing, but we did have to pay attention to it because it was rejections off the 200 EMA. So because this was a bigger one, I felt we were going to shift to the upside, but needed to be prepared for both. And what I'd said to the community was, because we rejected this 200 EMA too many times, and if we break it now, we have to release these trapped traders. What I would wait for is a break and retest of the 200 EMA. And this circle right here is exactly what happened there. So price broke through with volume, these green candles here. You can see price broke through the yellow EMA. It came back to retest it, stayed above that EMA right there. That there was your area to enter, and then price shifted out. Now, from there, look at this difference. So remember I said to you, when price goes into a liquidation zone, you want to see how fast it shifts out, because if it shifts out, we're likely to get a trend change soon. If it consolidates, we're likely to get continuation. So look here, this right here is a perfect example of that. once price had shifted out of that range, it went for this liquidation level at 28,327, and look how long it consolidated there before continuation to the upside. So don't expect that liquidation levels are always going to be an area of reversal, even if they're like extremely large. They'll usually have some sort of initial trigger where they'll wick into it and kind of sell out. Like, see here, this was the very first time that it hit that liquidation level, and that is a fairly decent inverted hammer. There's always going to be that sort of a reaction to each one. This blue one here was the first time we wicked into the 28,826, sold off out of that, and then it was just continuation. Now, we ended up breaking right through this one, but have a look here as well. The first time we hit 29,161 liquidation, the candle rejected, and then we shot right through. So you never react on the first attempt at a liquidation zone. You have to wait to see the follow through afterwards. But those were all the liquidations that I had marked on this chart leading into this move to the upside. So we basically need to refresh them now. So I'm going to go to Hype Block, and first I just want to see kind of what's going on in the recent price action. We've got our delta currently to the longs at around 18 billion. That's really quite high. That means that people are feeling very, very bullish. When you look here, total short liquidations 108 compared to longs 530. So 5 times more people are long than they are short. That's usually a trap, but it may not be a trap yet. So just keep that in mind. And then we can see here that these spikes out here are a lot of people literally going literally going long on the very last part of that move. So this candle right here, this is where everyone has jumped on long now. They're the first ones that will end up getting taken out when the market maker does decide to reverse this. So we've got some pretty decent levels starting to build below price. What we've got still above price, not too much at this stage, but there's still some levels we need to look out for. So we're going to look out for 30,211 and 30,804. Now, I've just added in some of these higher spikes below price as well, these ones down here, because they will act as a retracement level. So one thing that's interesting to me is that we do have a liquidation level at 29,260, and if price does kind of build a bit of a bull flag now potentially, it may retrace down to somewhere around that level before we get the next move to the upside, if that's the way it's going to happen. And if it does, it won't be a full recovery of this vector candle here. So that's kind of quite decent. Not to mention that by the time all of that happens, if it does happen, then the 50 EMA will catch up to that liquidation as well. So something like this is a flag before the next move to take out the higher liquidation levels at the 30,200 kind of level. That kind of makes sense. And I say that because now if we go to the 1 hour chart, I do believe that there is one more rise to go. So if I have a look at this here, we've got, this is a final damage W formation here, but you could also probably just say that this whole area was the W. Because it's over a weekend, it does take a lot longer to form. So from there, the shift out for level 1 was here when it crossed the 50 EMA. So all of this here on a 1 hour time frame, usually within a rise, there are 3 pushes to that direction when we're talking higher time frames. So on the 1 hour, I've got 1, 2, 3 candles here. That would make all of this rise level 1 for me. And then we went into a board meeting or consolidation. Then we've had here 1, 2, well, more than 3, but anyway, we've had at least 3. So this would count as rise level 2. So if the model is to complete itself and play out, then there should be another rise coming at the very least. And that may take us to these higher liquidation levels at somewhere between 30,000.2 to 30,000.8. It would also line up with the last week's high of the week in that area, which was at 30,500. And that area is also the 50% line of the weekly vector candle. So if I zoom out to show you that, that's this red candle right here. Price has not yet returned to that area to recover that zone. So that's what I've been waiting for ever since this, since we were at 16,000, was to see if we can get back up into this zone. And, if we do, then there isn't any other weekly vectors for back at 50K. So I'll be looking for the daily one. If we do a full recovery of that weekly one, the next daily one is going to be up here, which to me, I think this would be the final rise for me in this whole uptrend since Bitcoin was at 16K or whatever it was. And that puts it between 36 to 40,000. So it is a big candle, and obviously it's got to break this zone before it even has a chance of that. So this zone is 31.8 to 34. So we've got to get through there before there's a chance of anything higher. But even when you look on the daily time frame and you're doing your count on the daily, the reason that I'm open to, somewhere just under a 40K Bitcoin is because we've got our W, rise 1 here, retrace, rise 2 here, and that's the retrace, we're currently in rise 3. So if we get through this zone, if we break through it and get to the upper side, it is possible that level 3 does give us somewhere between a 36 to 40K Bitcoin. But that is very, very dependent on breaking this area of interest first. So we'll talk about that if it actually happens. In the meantime, we're just worrying about what we can see now. And what we can see now is that there should be another rise to come, but it's going to take time for this to build some sort of a flag formation to do it. And the only reason I don't really think that there's an M formation to take this out and reverse it just yet is because we don't have a stopping volume candle. So we haven't made it to this liquidation level yet, and we don't have a stopping volume candle where price has stopped. So to me, this is just a board meeting retracement move, what's happening now in the last few hours, and it's not a reversal just yet. So that's that. Let's take a quick look at Ethereum. Now with Ethereum, it was pretty much the same story as far as where to enter. Ethereum had hit this liquidation level at 1813 3 times, 1, 2, 3. But every time it did it, it was creating lower lows. That's what made Ethereum a little bit trickier this week. But I was open to the idea of it changing because Bitcoin gave those signs with the open interest that there was a chance it was going to break out. So with this one, my message to the community was to wait for the break of the 50 EMA, which is the blue one, and a retest of that one. And you can see in this zone right here, that was it. So we got the perfect break and retest on both of them this week, which was really, really lucky to get the entry to move to the upside. So again, the 15-minute 3 rise has finished, which means we go up to the 1 hour to see if it's feeding up in time frames. And if it is, which it is, we've got the one move here, we've got a board meeting here. These aren't really high volume ones, which was a bit not great, but it was a high volume one that broke the 50 EMA. That's what counts. Board meeting and another rise here. So both of them to me look like on the 1 hour time frame, 2 level rises. There should be one more to go if the model is to complete itself. Now there's a liquidation at 1999 for Ethereum, and there's another one at 20,042. I usually prefer to match this up to vectors, not just the liquidation zones on their own. And you can see that here, there's a very large vector that does fall in line with those 2 liquidation levels. Now let's just see where is the halfway mark of this candle. So the halfway mark of this red candle right here is sitting at about $20,007, which if it does spike up to there, it's going to take out that 1999 liquidation. So yeah, for me, I don't see a reason for the market to turn around. Usually there is a news event that will trigger that. So let's take a final look at that. By the way, if you are enjoying this content, be sure to smash that like button, leave me a comment down below as well, and subscribe if you're not already subscribed, because it's a good way to give back if the information is helping you by helping me also grow this channel. So having a look at news events, it is 26th of April right now. These times are all currently in London time, so you just need to convert these to your own time. But Thursday, 1:30 p.m, we've got unemployment claims, and advanced GDP, and then Friday we have core PCE price index. So they're both enough time for us to get a rise level 3 before the news events come out. So yeah, that's what I'm thinking at this point in time. Let's wait and see. However, if you did catch the long and you'd be in fairly decent profit by now, if you did, make sure you at least take some profit and move your stop loss up to protect yourself, so that should this swing around fast at any point in time because something unexpected happens, you're going to get stopped out in profit rather than stopped out in loss. So always be sure to manage your trades really well. And that's all I have for you. I'm going back to the freezing cold day in UK, and see you guys on the next one.